Hey everyone, and welcome back to the channel. If you're ready to unlock the secrets to building long-term wealth without getting lost in financial jargon, you've come to the right place. Before we dive in, do me a quick favor and hit that like button, share this with a friend, and make sure you're subscribed so you don't miss out on more game-changing content. Let's get started. Ever feel like investing is this super complicated game designed for Wall Street wizards, not for regular people like us? Well, today we are tearing down that myth with a true classic, The Little Book of Common Sense Investing by the legendary John C. Bogle, the founder of Vanguard. This book is a beacon of clarity in the often murky world of finance. Bogle's core message is brilliantly simple: stop trying to beat the market. He argues that the vast majority of professional money managers, the so-called experts, consistently fail to outperform the market average over the long run. Why? Because of costs, fees, commissions, and trading expenses act like a constant drag on your returns. It is like trying to run a marathon while carrying a heavy backpack, you are just making it harder on yourself. So, if trying to pick winning stocks is a loser's game, what's the winning strategy? Bogle's answer is the low-cost index fund. An index fund is a type of mutual fund that aims to replicate the performance of a specific market index, like the S&P 500. Instead of trying to pick the best stocks, it simply buys all the stocks in that index. Think of it this way: instead of betting on a single horse in a race, you're betting on all the horses to finish. You won't win big on a long shot, but you also won't lose your shirt if your chosen horse stumbles. By owning a slice of the entire market, you capture its overall growth, which historically has been consistently upward over the long term. Bogle uses a fantastic analogy he calls the relentless rules of humble arithmetic. It sounds fancy, but it's just basic math. Your net return is simply the gross return of the market minus the costs you incur. Every dollar you pay in fees is a dollar that's not compounding in your account, and trust me, those seemingly small fees add up to a fortune over time. He tells a story of the Gottschalks family. Imagine this family owns all the stocks in the US market. Their returns are exactly the market's returns. Now they hire helpers, brokers, and managers who trade stocks amongst themselves. Every time they trade, they take a little fee. At the end of the day, the Gottschalks family as a whole is poorer by the exact amount they paid in fees. This perfectly illustrates how active management as a group is a negative sum game for investors. The only guaranteed winners are the financial intermediaries. The magic of index funds lies in their efficiency. Because they're not constantly buying and selling stocks, their operating costs and trading fees are incredibly low. This cost advantage translates directly into higher returns for you, the investor. Bogle proved this wasn't just a theory. He built Vanguard, one of the world's largest investment companies, on this very principle. Now, let's talk about the enemy of the long-term investor: emotion. We see the market go up and get greedy. We see it go down and get scared. We jump in and out, usually at the worst possible times, buying high and selling low. Bogle's advice is powerful. Don't just do something, stand there. Once you have a sensible plan based on low-cost index funds, the best course of action during market turmoil is often to do nothing at all. Your greatest ally is time. Bogle is a huge proponent of the buy and hold strategy. By investing regularly and staying invested for decades, you let the power of compounding work its magic. Compounding is where your investment earnings start generating their own earnings. Albert Einstein supposedly called it the eighth wonder of the world, and for good reason. It's how small, consistent investments can grow into a massive nest egg over time. So, what are the practical steps you can take right now based on this book? First, own your age in bonds. It's a simple rule of thumb for asset allocation. If you're 30, aim to have about 30% of your portfolio in a total bond market index fund and 70% in a total stock market index fund. This balance helps smooth out the ride, as bonds tend to be less volatile than stocks. As you get older, you gradually increase your bond allocation to preserve your capital. Second, start now. No matter how small, open a brokerage account and set up automatic monthly investments into a low-cost broad market index fund. Think of funds that track the S&P 500 or the total US stock market. The key is consistency. Investing $100 a month is infinitely better than waiting until you have thousands to start. The sooner you begin, the more time compounding has to work for you. Third, ignore the noise. The financial News media thrives on drama and short-term predictions. They'll shout about the hot new stock or the impending market crash. Your job is to tune it out. Stick to your long-term plan. Don't check your portfolio every day. Maybe check it once a quarter or even once a year. Your focus should be on the decades ahead, not the day-to-day fluctuations. The key takeaway from the little book of common sense investing is that successful investing doesn't have to be complicated. It's about discipline, patience, and minimizing costs. By owning a diversified portfolio of low cost index funds and holding them for the long term, you give yourself the best possible chance of achieving your financial goals. You're not just investing, you're owning a piece of capitalism's growth engine. So, to recap, forget trying to beat the market, embrace the power of low cost index funds. Keep your costs as low as humanly possible. Diversify your investments across stocks and bonds, and stay the course for the long haul. Let time and compounding do the heavy lifting for you. It's a simple, elegant strategy, and as John Bogle proved, it's the most effective one for the vast majority of investors. Thank you so much for watching. I hope this summary has demystified investing for you and given you the confidence to take control of your financial future. I'm really excited about our next video where we'll be diving into another life-changing book. If you got value from this, please hit that like button, share it with someone who needs to hear this message, and don't forget to subscribe and turn on notifications. See you in the next one.